up, people? I got y'all right here on the 4 hourly. As y'all can see, we came up here, tested, look at one, two, third time we broke through, and as y'all can see, we bouncing off just 100 EMA, like I mentioned, but we dropped below because remember in my previous video I mentioned. Let me slide over. We had to break above this candle. We had to recover this whole candlestick right here in order for a confirmation that we actually have a reversal up to the next level. So y'all can see it makes sense. If y'all can see the dotted line, so this is around 20,800 that I said last time we had to get above for a confirmation that we're gonna continue up and take this green route. But obviously we're down here with the M because we broke right back below the 100 EMA. And as you can see right now in the 4 hourly, we're right here above the danger zone. I keep telling y'all about around $19,000. This is when we're gonna start flying, but the real candlestick is right here. It's gonna start around 18,000, say 18,500 to keep it simple. That's gonna be the real candlestick that's gonna take us to 14,000. So we're right here. And to be honest, we could get a quick, could start up here too, but I really believe that the big candlestick ain't gonna start till you get down here to 18.5. Anyways, as you can see, we're bouncing up from the danger zone because they're trying to hold it in place. So let me hit y'all up because there's a possibility we could come back up and tap this. I'm gonna say the 50 EMA. It basically, as y'all can see, we're just still in the exact same zone we've been in since September because they're holding it for a special moment. I hit y'all on a daily now. As y'all can see, we basically came up at one spike up, two spikes, third spike, boom, rejected by the 50 EMA, and it's clear as day. And you see this, especially when you see something like this, that's mad stopping pressure right there. Came back up, got rejected. See 3 hits, 1, 2, 3 on the daily, and now we're going down, and we're right here, literally at the danger zone between the 20 EMA. So things is looking pretty. It's iffy right now because basically by tomorrow we gonna know what they're gonna do because they could hit some kind of crazy move. I'm gonna show y'all on the weekly real fast so y'all can understand they like doing this too. So let me take the drawing off. Boom. As y'all can see on the weekly, new weekly about to start too. So basically we'll get another candlestick, the third candlestick for the weekly, right? We could get a spike up here. It's 20 EMA, which could still be around 20,800 because that's the number that we got to break across. And as you can see right here at 20,860, see this doji right here? Yeah, this is definitely the next level, and it should be hitting the 20 EMA on the next week. So we could get another spike up, but this time once we go down, we're going down. As you can see, we also hit this support level because you can see the spikes down here, right? It's basically all level. And right now it's level to the body of these candlesticks, and that's 1, 2 candlesticks already down to the low. And you can see this one stopped right before it. So the next week it's gonna come up. It's a possibility because you see 1 hit, 2 hits, the third hit it's over. You know what I'm saying? And they can do that in a day. They can do that in an hour and reverse the markets. Excuse me on that. Anyway, so you reverse the markets on down. So on the weekly, it's still, you know what I'm saying, still the same thing. All they doing is dragging it right here on this major support level. You know what I mean? Because once we drop below it, as y'all can see, and I've had this plan, you know what I mean? We going straight to $10,000. $10,000, spike up to 14,000, rejection, coming all the way down to 5,500 to recover all these candlesticks we have to the left. And hit y'all on the monthly so I can see a little better. Boom. Y'all can clearly see how I got all the support levels. You can read these charts, and we coming down to recover all the candlesticks. The weekly charts show much clearer, but basically coming down here to the general area to recover these things. Because as y'all can see, this already happened one time before. Right here, this candlestick, and you see this wick, boom, came down and recovered all of that right there. And as y'all can see, there's another pattern. Got a W, level 1, level 2, level 3, peak formation, boom. But anyways, you can see as they was coming up, they spiked down. That's why the candlesticks are much smaller, because basically they're recovering as they go up. But yeah, I'm gonna repeat it again. You know what I mean? We might get a spike up to 20,800, but then a reversal because our next stop is $10,000, uptrend to 14,000, and then the final drop to 5,500, and then a quick recovery. because it has to close above $10,000 within the same month it makes this drop. But also, I'm gonna keep y'all in mind, once it get around $10,000, there's a possibility you may not get that return back at the 14,000. We could keep going down because $10,000 is a very dangerous range. Because like I said, it could keep going or it could just meander around like what it's doing now. But, you know, be careful because the time is finally here, man, because they really ain't got no more room. Because they really pushing it. But, I mean, still kind of going by the market because they've been down there 3 times. Boom. They showed the break right here on a monthly chart. And we're in a new month. And we basically already recovered the box of this candlestick. So that's why they can literally stay in the general range. And on a shorter time frames and still hit that EMA and still be within this range. And then they're going to make the drop. Like I said, all the way down here. $10,000. Completion of the head and shoulder formation. Boom. But yeah, anyways, anything I just said is not financial advice at all. Y'all grown. Y'all make your own decisions. But like, comment, and subscribe. Peace.